Hello, my name is Herp Lamba, Senior Vice President of IG Wealth Management. First and foremost, I hope you and your family are staying healthy and safe during this difficult time. Like you, I'm concerned for the wellness of my family and my community, so we've moved our office to work from home. As such, I'm reaching out to you in a new way from my home to yours. Welcome. Now, as we all do our best to stay well, we follow the advice of the health professionals to eat properly, get enough sleep, exercise, and manage our level of stress. On the topic of managing stress, it starts with acknowledging the actual stress point or emotion, assessing the risks involved, managing the risks we can, and doing whatever it takes to help protect against the risks we cannot control. Now, during volatile times, financial uncertainty can be an added stressor. We can help alleviate some of that stress for you by sharing how we have built your personalized plan to include strategies that address risks to your long-term goals. We can't control what happens in the markets over the short term, but if you understand how we manage your plan to meet your long-term objectives, you can face the future with confidence and stay the course. Now, as market volatility increases, investors have a natural tendency to want to move into safer investments, hoping to avoid further losses. Reacting to short-term market noise by making dramatic portfolio changes can have a negative impact on achieving your long-term goals. Now, history shows that by maintaining discipline and perspective during market downturns, a patient investor will often be the one rewarded when markets return to an upward path, which they always do. So this year, we're experiencing significant volatility as a result of the global pandemic. This exogenous event has created uncertainty, and during uncertain times, the world stock markets tend to decline in the short term. That's why it's so important to have a diversified investment portfolio. When you diversify globally as well as by asset class, it creates stability in the portfolio during times like we're experiencing today. Now, it's important to note what you're seeing on television and reading in the headlines is not necessarily what you're experiencing in your portfolio. Why? Well, as highlighted on the slide, the broadest Canadian stock market represented by the S&P TSX Composite Index was down approximately 20% for the year as of this taping. However, many of our managed solutions were only down a fraction of that amount. Proper portfolio construction reduces risk and provides downside protection. For the last 11 years, we've been enjoying one of the longest economic expansions and strongest bull markets in history, but you wouldn't have known it on March 9th, 2009. On that day, the S&P 500 index was down by 50% from its previous high, and many people believed capitalism had failed. Taxpayer dollars were being used to bail out the global financial system, and the forecast for the future was bleak. There was little optimism for the stock market as it was believed that economies wouldn't grow for many years to come. Since March 9, 2009, we've had one of the greatest bull markets in history. But since that time, investors have lived in a constant fear of the next financial crisis, as you can see in the slide. Now, we've endured many events that seemed at the time to be permanent barriers to future financial success. In each one of these instances and many others, the first reaction of the stock market is to decline, but then markets eventually rebound. In fact, over this ongoing cycle of crisis and recovery, markets have continued to reach new highs. As the graph demonstrates, the S&P TSX has delivered an annualized return of approximately 9% since 1956 and has proven to be resilient through the worst market conditions. Over the same period of time, there have been many instances when the S&P TSX declined by more than 10%. As the chart illustrates, this has happened 24 times since 1959, yet each time the market recovered and achieved a higher level. Throughout history, equity markets have experienced volatility, yet despite this, they continue to be resilient. Staying the course is extremely important during periods of volatility, as it enables investors to fully recover from these periods and achieve their long-term investment goals. Now, the question I like asking is, if you could go back in time knowing what you know now, how would you have capitalized on the downturns of the past? Now, most would answer, if I had money, I would have bought more at those times, and you would have been right. But what if you didn't have any more money? That is where our world-class sub-advisors come in. We have some of the best and largest asset managers in the world managing the investments on your behalf, looking for opportunities right now. Many of the strongest returns in the markets occur in the period immediately following a sharp decline, when individual investors are feeling the worst about what is happening. Since 1950, following the worst 12-month periods of performance by the S&P TSX, the market made solid gains just 12 months later, with only one exception. And within 5 years, the markets were up significantly, meeting and exceeding long-term return expectations. Now, in order to take advantage of those returns, it's important for investors to continue to focus on a long-term plan, stay the course, and remain invested. Those who exit the markets, even for a short while, risk missing great opportunities when the markets recover. There are 5 principles we follow with your IG living plan that have stood the test of time through all market conditions. 1. Use time to your advantage. Time is your greatest ally. 2, diversify your portfolio, making sure you don't have all your eggs in one asset class or country. Number 3, avoid emotional decisions. Most decisions we make off of emotion are usually not the best ones. We need to follow logic. Number 4, maintain a long-term focus. Reason is your IG living plan is designed to last your entire life. And number 5, stay invested. That is how you win, and that is how you succeed. Now let's unpack these principles one by one. Investing for the long term is one of the best strategies for offsetting short-term market volatility. Financial markets can quickly move in and out of favor. Staying invested ensures you're always capitalizing on the upside of the market and reducing the impact of short-term market volatility. Although the probability of negative returns in the short term is relatively frequent, the following chart illustrates that, more importantly, the possibility of receiving a positive return greatly increases as the investment term lengthens. Said simply, in the short term, markets are very unpredictable. However, over the longer term, they are very predictable. They are positive. Now, deciding what to invest in can be a daunting task. Whether you're a new or experienced investor, investing in a diversified multi-asset portfolio removes the guesswork of how to successfully invest over the long term. This chart demonstrates that, in many instances, the top performing asset category changes every year. As well, asset categories that are among the best one year could be among the worst the next, while others remain somewhat consistent year over year. By diversifying across different asset classes and investment styles, investors can offset risk and increase portfolio returns by balancing exposure in both positive and negative market environments. Using a portfolio approach to properly diversify your assets can reduce the negative effects that any individual security or asset class may have on the performance of your portfolio. Financial markets don't always move in the same direction. By carefully diversifying your portfolio, we can reduce your risk and enhance your chances of successfully attaining your long-term goals. Now, if you look at this chart, you only experience the roller coaster ride of emotion if you allow yourself to get distracted by it. There's an old saying, buy low. Note from this illustration, when a typical investor is feeling the worst, where they're feeling despair, nauseous, dejected, is the point of greatest opportunity. That is the paradox when it comes to successful investing. Since 1948, the S&P TSX has seen 50 positive calendar years compared to only 22 negative years. In other words, it has provided positive returns approximately 70% of the time throughout its history. Those are great odds. In the chart, annual returns since 1948 are plotted within the respective ranges. The result is a fairly normal distribution in what is statistically referred to as a bell curve. Most returns are hugging the 0% to 10% range. Of particular note, look at the year 2008 on the far left-hand side. It saw a decrease of 33%. In contrast, the following year, 2009, saw the pendulum swing completely the other way, with the S&P TSX returning positive 35%. Generally, negative returns tend to be followed by positive returns, which is why it's important to stay the course. All investors love the prospect of a rising stock market. However, once the trend starts downward, many investors feel the need to be defensive and retreat to the security of cash or money market instruments. While no one likes a turbulent market, those investors who can focus on the long term and stay invested, as this chart demonstrates, stand to gain. For example, an investor who stayed fully invested in the S&P 500 Composite Index from January 1st, 1990 to December 31st, 2019, so basically a period of 30 years, realized a 7.7% annual return excluding dividends. Conversely, an investor who missed the 50 best days of the S&P 500 over that period of time, so basically 1% of the trading days, realized a negative 0.4% annual compounded return. So by missing a tiny fraction of the trading days, they would have given up all of their returns. That is why timing the market is difficult. In fact, it's next to impossible, as you need to be right twice, when to get out and when to get back in. Time in the market is what is essential, and that is why staying invested is so critically important. A combination of discipline and perspective is the key to reaching your long-term investment goals. In contrast, obsessing over daily market fluctuations and short-term noise can be a surefire way to fall short. One way to achieve this fine balance is by having a long-term plan and then, most importantly, sticking to it through all market conditions. While this may sound simple, recent market conditions have put investors to the test. Veering off course from a carefully thought out plan can turn a temporary loss of confidence into a realized loss on an investment portfolio if you panic and lose your focus. Now, every IG living plan is developed with a holistic viewpoint and is synchronized across all aspects of your financial life. When you have a holistic financial plan developed specifically for you with expert advice, you know when and how to act, and you can be confident in the decisions you make. IG Wealth Management is in this with you. We've tested our approach with cutting-edge predictive software, and we've partnered with leading investment managers from around the globe to help deliver results. Together, we can work on creating and maintaining the plan that's most suitable for your unique circumstances. We take a team approach when building your plan. With you at the center, your IG Wealth Management consultant uses their team's expertise, plus the experts we have in all areas of financial planning, to produce not just good, but extraordinary results. We also believe in coordinating the planning with your other personal advisors, like your lawyers and accountants, to ensure we're all working together on your behalf. This allows us to move quickly, but we do so with complete conviction and confidence. It's important not to be distracted by the headlines, daily news, and constant fluctuations in world stock markets. Remain focused on your IG living plan. The plan should be reviewed on a regular basis, especially during times like today, to ensure you're on track to achieve your specific goals and dreams. Your plan will provide the clarity on how to stay the course and capitalize on any attractive opportunities that present themselves. Now, your regular investment statements serve as a snapshot at a moment in time. For example, you will soon be receiving your investment statement for the end of March, and it will show you the value of your portfolio on that day. During market downturns, it's natural to feel nervous or unhappy if you see a financial loss on your statement. We definitely understand how you feel, but we also want to remind you that the loss exists on paper only and is not realized until a decision to sell is made. So a loss is not a reality until you actually sell. And as your plan has been designed for the long term, our recommendation is to resist acting impulsively and stay invested. When building your IG living plan, it's important to stress test it. This means using our leading-edge financial planning software to determine the probability of success of your current plan. This advanced technology is available for your plan. If you'd like to review it further, please discuss with your IG Wealth Management consultant. Now, most projections that are created by software will use averages. For example, if you projected a 5% compound average annual rate of return, the software will model your plan as if you're going to achieve a 5% return each and every single year. We know this is not reality. Some years will be higher than 5%, the other years will be lower. In other words, you will experience fluctuations in returns from year to year. These fluctuations, or what we call sequence of returns, truly matter. So we run several rigorous trials of how you could achieve the compound return you have projected to model current events like what you're going through today. We then determine your probability of achieving your goals. Our focus is to get your plan as close to 100% as possible, which will help you look forward into the future with clarity and confidence. Over the course of our investment years, there are only a limited number of times when major market corrections will lead to highly attractive investment opportunities, and we believe this is likely one of those times. As legendary investor Warren Buffett has been known to say, be fearful when others are greedy, and greedy when others are fearful. Quite often, when markets appear to be at their bleakest and everyone is panicking, a focused long-term investor stands to benefit the most. Ladies and gentlemen, we're here to help you navigate and prosper through these turbulent times. On behalf of our entire IG Wealth Management family, we wish your family great health and safety. Thank you so much for your time today.